So thank you, Jane. And yes, I'm Marianne, the director of the Sustainable Digital Finance Alliance. We were founded as a public-private partnership between Ant Financial and the UN Environment Program. So we really work to promote the application of Fintech for scaling green finance. And we believe that this is a moment in time, a moment in history where the financial system is open to change because of the large degree of digitization. And we have on the panel with us today 4 thinkers and doers that are exactly doing that. They are hands-on working to transform the financial system with technology for greater justice and greater impact. So that is what we're going to have a conversation around over the next 30 minutes. Next to me is Sufi Deo. He spent the last 20 years building tech companies that creates the measurable social impact. Today he is working with especially refugees communities, and he is delivering inclusive microfinance. Next we have Alastair Marke. Alastair Marke is the Secretary General of the Blockchain for Climate Institute. He holds an LLM in climate change law and is the editor of the book Transforming Climate Finance and Green Investment with the Blockchain. He's an advisor at the level of the all-party parliamentary group on a number of climate finance standards. Next to Alastair, we have Matthew MIMS, who is the co-founder of the HIVE online blockchain platform, which is a digital trust platform that brings together contracts and reputation of small and medium-sized enterprises in developing markets. And HIVE just launched a solution, the ZULFIQAR solution in West Africa, which offers access to capital for small and medium-sized enterprises. And last but not least, we have Morten NIELSEN, who is the CFO of ARYZE, which is a blockchain-powered digital cash platform. Morten has spent most of his career in investment banking with JP Morgan and UBS, and really transforming the financial system via digitization of financial assets is what Morten is working on with ARYZE. So we have a very competent panel with us today, but you cannot talk about financial inclusion using the blockchain and cryptocurrencies in the same sentence today without talking about Facebook's Libra, right? Because they have over 2 billion users on the platform. We have today 1.7 billion unbanked in the world. And Libra must just be the dream of any unbanked in the world, right? It's a global, it offers globally transferable funds. It offers you to do remittances at basically 0 cost, just paying with your data. And for Facebook, it actually offers them also a win situation, right? Because African users are the ones that offers the least monetization at the moment to Facebook, but with the Libra, they can get much more data to monetize on African users. So basically, a win-win situation, isn't it? Morten, ARYZE we're also working on, one of the use cases is bringing down remittances to way below the SDG target, so almost down to 0%. So can you explain to us how you're working on doing this and why you don't think necessarily Libra is going to strangle your business?
Yeah, but delighted to, Marianne, thank you. Let me just explain that ARYZE is in the process of completing we're finishing our last financing round right now, and in Q1 next year, we will launch our main product, which is digital cash, a direct representation of an obligation in a central bank, so that you have no uncertainty about what it is you hold in your digital wallet, and can use that in any way, of shape, or form you want as programmable money or transferring money around the world. It's a question of building what Libra is not doing, a system of trust where there's no credit risk involved, because every time we issue an e-dollar, it basically is the equivalent is placed directly in a central bank, and we start off with $1. And there's no market uncertainty about how many coins we issue, and as such, you have a system of trust. There's also a long story about why it's great for us to come from Denmark, because our DNA, being from Denmark, is not American, not Chinese, and we can kind of talk to everybody, especially in Africa and other places where they're very scared about Americans' surveillance, so to speak. Libra is different, right? Because Libra is basically sort of a new cryptocurrency that might have market risk. We do not exactly know how they're going to offset the risk involved in Libra. And we don't know how they're going to use the data associated with that, which could and should be a major concern of a lot of people. So what we do is that we take basically the money that we get in, we put them on a blockchain, and then we distribute ownership around the world when people want to move money from A to B. That we can do at almost zero cost. It's really, really efficient and totally secure. That means we can start working on financial inclusion. We can work on things like remittances, where we can reduce the cost from the 7 to 10% that is currently prevailing to about 0%. We have a little bit of an FX cost when it's exotic currencies, but apart from that, it's going to be zero. And anybody can hold digital value on a mobile phone if they have a smartphone, even if it's just $5.
Thank you, Morten. Very exciting. And how about you, Matthew? You are working with unlocking capital, using blockchain to unlock capital to SMEs. We know when people get connectivity, the first thing they do is not check the weather if they're a farmer. It's not to go on an e-wallet, it's to go on social media. That's what everybody does. So are you not afraid? Why would they then, if they can have a Facebook wallet to where they already market their business, to also transact? Why would they use the Hive platform, another app?
I suppose, firstly, let me say that, so Libra, I think in the ecosystem is a great thing to happen, because I think it makes a lot of people wake up, see the power of crypto, and for a lot of the incumbents to actually feel threatened, which will help people start thinking, we need to do something. And especially around things like cross-border remittances and the cost of that, I think that will really help move the needle. For me, it comes to approach in the way that Facebook has created their solution, and the motives and the governance around what they do. And so it feels to me that, well, so the challenge is that there are over 50% of the world's GDP and workforce comes from small businesses, and yet they only get less than 5% of the world's available financing. That's a challenge that we're trying to solve through Hive Online by providing them with a fact-based reputation and tools to support their business in improving that reputation. Facebook obviously say that they've got the platform, they've got the share there, but are they really thinking about the customer? Are they really thinking about how to unlock in a collaborative way the potential of those small businesses, or is this just, let's get another set of customers across the developing world because they want to expand their footprint and hook more people in? From the governance perspective, I've got concerns from the side that it feels like this is very much a Silicon Valley solution, trying to solve or reach further across the world. Even though they're based in Geneva, it feels like a lot of the association are Silicon Valley based, and the fact that there are things like the $10 million buy-in, I think causes challenges for me around how they're incentivizing and supporting that the economy. So what we're trying to do is work with partners in the field, work with the customers who want these solutions, and providing solutions for them with the technology, providing the fact-based trust that enable them to grow. And we feel that by collaborating and allowing them to have to thrive, we all do better, which I think is potentially a different way than Facebook would.
Thank you, Matthew. So, Sophie, we hear that there are alternatives to Libra. There are some that are treating trust and personal data in different ways. You're going in to actually rethink loans, to do what you say it's called you humanize lending. How can you humanize lending? Isn't it just sort of a a financial product, and how is that humanized approach to lending creating more SDG impact?
To start off with, I'd like to say that what Facebook is trying to do was foreseeable, and their approach is to push boundaries. So from that point of view, I think what they're doing is great. It brings the debate into the mainstream and gets everyone talking about it, thinking about it, and working on these topics there. From our approach is we're taking a people-centric approach. So when we look at finance, we don't look at it as access to money. We look at it as people who have needs and what kind of needs can we solve using finance. So for instance, we support 2 refugee communities, one in Uganda and one in the Swat Valley. Our solutions for them are different in each community based on the unique needs. So what is common among them is poverty premium, is a social exclusion premium, and is the digital divide. So for instance, in the Swat Valley, they have security reasons there. So if there's a hint of the Taliban being around, the military will simply shut down the internet. And in that environment, it doesn't matter how good the tech is. If the internet's not working for 2 weeks, you can't do any business. So from that point of view, the way we structure our support is to overcome these hurdles. In Uganda, for instance, we support below $5 a day communities alongside our delivery partners. And there the issue is, again, access to is a digital divide. Either they use very low-end mobiles or they don't use them at all. So how do you engage those people using digital mechanisms while allowing them to engage with the financial system? It's very difficult to do. So on that side, we are planning to work with Holochain. It's a slightly different version of the blockchain. It's more custom designed for peer-to-peer engagement, basically. And that allows the users to own the data. So in this case, the refugees we will be supporting own the data, and they can monetize that data themselves using that custom design version of the Holochain that we will launch soon.
Thank you, Sufi. Very interesting. And Alastair, you come more from, and you also ended up talking about ownership of data that get us very much into the regulatory domain. Alastair, you come from more of a regulatory perspective today. Can you share with us what you see in developing and emerging economies in terms of regulation? What is needed for maximizing the impact of the types of solutions that we hear on the panel today?
Yeah, sure. Yeah, so on the ISO level, there's ISO 22739, ISO blockchain standard that we're developing. We're trying to develop standards for the presentation of use cases, smart contracts, identities, and the governance of a particular blockchain network. And these are partly aims to inform the development of new legislation in different jurisdictions. But I can keep the long story short. I would like to share with you 3 points of disruptive effects to the regulated environments that we need to be aware of. The first one is about the simplification of existing law. So as our colleague said, the use of blockchain or distributed ledger technology to process transaction means that some of the frauds that are traditionally are very sensitive to regulators are gone. So the courts no longer need to examine as many fraud-related cases as before, and all the compensation-related provision in a particular regulation might be outdated. Secondly, is about the emergence of new legal actors. So right now, in the current financial regulations, it covers only the financial institutions in order to satisfy all those financial financial processing standards. But in the blockchain era, when more and more financial institutions adopt smart contract drafted by coders, then we need to study whether the future financial regulation should also cover these smart contract coders who have overwhelmingly great impact on the execution of the financial transactions. Thirdly, is about the new patterns of enforcement of regulations. So right now, the regulators have to look look into the way in which financial transactions are done between the bank and buyers and sellers. But in the future, when blockchains are rolled out to the mainstream, we definitely need to encourage the regulator to focus on on and off ramp of data exchanges rather than the money transfer process, because it will be automatically executed within the blockchain network, which we call as a quasi-judicial process. But in the future, regulators' role should focus on then supervising on and off ramp of data exchanges rather than money transfers.
Thank you, Alastair. And let's do a short round of conversation more and then open up to questions. And let's do that from going from the future. Libra is still the future to the present.
Bitcoin, Ethereum is the future.
But the real present is that many of these countries are so indebted now that the IMF calls for soon a bailout. Because even though we have high growth rates in many African countries, they're still taking up massive loans to finance the SDGs. So,
Africa, it's not going to go to China, India, Russia.
sorry?
Libra's not going to take off in those countries.
No, let's keep that for the questions. Let's do a...
Libra's the future. That's an utterly ridiculous statement.
Oh, okay.
Utterly ridiculous.
Oh, it doesn't exist today. It doesn't exist today. That was my intention. Yeah.
Yeah, in what country?
We'll see. We'll see.
It doesn't exist today.
Yeah,
Okay,
but
let's
you're
get...
saying it's the future.
Sorry. Let's keep it to the questions, right? Let's keep it to the questions. So basically what we want to dive into now is more a discussion about how can we use blockchain and how are these solutions up here using blockchain to unlock new capital and more domestic capital sources, because that's what's really needed to create development impact. So Matthew, when you are putting these communities on the blockchain, what are you actually, how can you then unlock more community capital or attract more community capital to deliver on the SDGs?
Sure. So, today and tomorrow in Niger, in Central Africa, we're launching an ERZiki platform, which is supporting village savings and loans associations in partnership with Care International. Essentially, those are village groups of mostly women who contribute on a weekly basis and save into the community pot, and then can take out loans as and when they need them. And they also have welfare funds and things like that. And that currently is managed very paper-based, with a very low level of literacy, and a sort of nice little box that they store all their cash in, and they write everything in one of my old school exercise book type things, which has been a big step forward. But the challenge is that is very much constrained to that paper-based notebook. What we've been doing with our solution in partnership with Care is taking that to the next level and digitizing that, providing the level of trust and transparency that blockchain provides, and allowing those good behaviors that those communities are showing through their saving and their repayment of those loans, to open that up to a wider network of potential financial actors and other people in the community. So over several phases, we're looking at firstly providing those indelible records about how they manage their money, but then involving microfinance institutions to provide more liquidity into those communities. But also then reducing the cost of those loans, partly because there's more trust and we're able to demonstrate that trust based on how they behave. But secondly, purely from the perspective of they don't need to transport the cash around the country in places where it's very difficult and very costly, because there has to be armed guards, and that adds a significant markup to the cost of a loan. So
Let's keep it really short,
Yeah, sure.
so we have time.
Yeah,
for
of course, sorry.
questions. But thank you. And then Sufi, you're also creating, on the demand side, you're creating more entrepreneurs that are investable.
Yeah.
From the refugee communities. Can you explain a bit more?
Sure. Our approach is to help refugees access training, inventory, and business support to help them take ownership of their own lives. Over the last 3 years on this project, all the research we've done, all the interviews we've done, all the visits we've done, has proven that refugees want to take ownership of their own lives. They have just not allowed the mechanisms to do that. So our solutions for them are structured in a way that allow them to receive this training, which allows them to access a life skill, but also to pick themselves up and then earn a living for themselves. And that then naturally generates a knock-on impact. So our first loan in Uganda, for instance, has trained up a female refugee. She is now running her own business, and now will soon be employing more people in that business there. And that's in a below $5 a day community. So at a very grassroots level, it is helping them take ownership of their lives.
Thank you. But when we focus on using blockchain to bring community capital and to bring more traceability and investments into communities, are we then not applying blockchain to sort of fix the wrong problem? Because more than development aid, many times more than development aid is leaving Africa because of tax evasion. So shouldn't we sort of focus on applying blockchain at a much higher macro level, where we have extractive industries, big companies moving capital out of these countries? Morten, ARYZE has some thinking and application around this. Will you share with us?
Yeah, I just saw the 5 minutes thing, but I'm going to be very, very quick here. I mean, for me being sort of a macroeconomist coming from JP Morgan, have worked a lot with central banks, this is not that complicated as far as blockchain technology is concerned. It's a question of being able to keep assets on a distributed database system. And that opens up for opportunities that goes way beyond anything we've seen for many, many years. We can all of a sudden create a system where we can rethink the way the monetary system works in every country. So we met with the central bank governor of Kenya not long ago, and he loves what we were doing for him, because we could create an economic and financial infrastructure for Kenya, which they don't have today. Not only are half the population financially excluded, there's also no mortgage market, there's no life insurance market, there's nothing. There's no financial infrastructure. And that's what we can do with blockchain technology. We can change that. But I'm absolutely adamant about this thing, having talked to a number of different people over the last 2 years. We got to start off with something they understand, something they can relate to, which means native currencies. You know, they're not gonna, can not expect somebody who don't have a bank account to start adapting blockchain, Bitcoin or Ethereum or anything like that. They don't know what it is, right? So we got to start with the fundamentals, then dig our way into a financial system that's defunct already now. And I want to make just one very, very quick point. And the current financial system doesn't work, right? I did a presentation last week where I highlighted the fact that the annual value of human trafficking, which includes women, slave prostitutions, right? Which is 21 million women around the world who work as slaves in prostitutions, is $150 billion a year. Yeah. Add to that drug money and all that, and all of a sudden you have a financial system that is just not working today. So we can change that as well.
Thank you, Morten. And ALASTAIR, let's address the first question from the audience to you so that we also get some of the questions from there. And that is, don't you think that these solutions should be driven by the people who really understand these markets? So I guess more Africans or Asians.
Yeah, of course. That's a very good question. That will help us drive the focus of the wider discussion back to the fundamental, the data. So now, undeniably, we have blockchain as and all the fintech as a really potentially very brilliant digital infrastructure, which we can use for all those development needs or whatever transaction we aim for. But definitely, we need to take a deeper look at what data get into the blockchain to start with. Otherwise, it's garbage in, garbage out. Yeah, for all those use cases, my colleagues have already spoken on, including refugees, women, issue, etc. They're actually part of the ESG factors which financial institutions or investors have to consider in the modern era before they put their money into it. So I would advocate to the policymaker regulators that before we look at blockchain, let's try to make use of other technology like artificial intelligence, including machine learning and natural language processing, to go through all the online available data like reputation risk, market risk, climate change risk, social risk, which will have an impact on the performance of that particular business before financial institutions decide whether they lend money to them or not in the decades to come.
Thank you, ALASTAIR, and we have 22 seconds left. So unless there are burning questions, I want to thank the panel and say to our intervener, Yeah, from earlier, yes, we don't know whether Libra is the future. We are shaping the future, and here we have people shaping it for greater impact, and I'm sure we have many also in the room shaping it for greater impact. So thank you a lot for taking part in this conversation, and thank you to the panelists.